Well, Treasury yields are sliding today as the recent curve inversion on the 3- and 5-year yields has investors looking for more signs of a slowdown. To Charlie Gasparino now in D.C., I hope we haven't just lost the audience based on what I said about a yield curve. It is kind of tough to think. But you pointed out something a couple of days ago before the Wall Street Journal had this story that it's the way in which these yields are changing that is of concern to economists.
I hate to be a professor of economics, but I did take a lot of it at the University of Missouri. I mean, the way yield curves usually are like this, right? More yield at the end because those are the long bonds. Right. You get paid for risk on the long end, and shorter here. When it flattens, it goes like this. So yields are going down. Those are interest rates. And just keep this in mind. Interest rates go down when bond prices go up, right? So when people are buying bond prices on the long end, why are they buying it? They're worried about a global slowdown. And that's why this is a problem. If you're buying treasuries on the 3, the 5, the 10, the 30, which is kind of going on here, particularly the 3 and the 5 today, you are worried about it's a flight to quality. You're worried about stocks. You're worried about slowdown in global economies. You're putting your money in a place where you at least know you're going to get your money back, because bonds are a fixed income investment. You give the government $1,000 in 5, 10, 3 years, 30 years, you get $1,000 back. And that's what we're talking about here, plus interest, obviously, and that's what the yield measures, that interest rate. And that's essentially what we're talking here. It wouldn't be so bad, David, and I'm going to complicate this a little more, if the yield curve was flattening because the Fed was raising rates, which it has been doing on the short end. What does that mean? Well, that means that, guess what? The Fed is raising rates because the economy is overheating and it's strong. This is a more worrisome thing, and that's why you see one reason why you see massive selling in stocks. The other reason is, I mean, there's lots of stuff here. There's a trade policy where investors have no idea where President Trump is going on trade policy. 1 minute we got a deal, next minute we don't, so they assume the worst, and they think we're going to keep getting hammered with tariffs from China, which, as bad as China is as an actor, if we get hammered with tariff, if we hammer them, they hammer us, it's going to be an economic price to pay.
But we're already seeing a little bit of that, Charlie, because these supply chains that are all over the world, trains for goods, are beginning to break up. They're beginning to dislocate
that's what the markets
because
are saying.
Of some of these tariffs. So it's not just the fear of a trade war; it's what's already happening as a result of some of these tariffs.
That's a great point. We already have tariffs. So he meaning the president and Peter Navarro and his more hawkish on trade crew are threatening more. Now maybe it's just a threat, but there's already stuff in there.
But we need a deal.
But we do, obviously. But still, this is still what we have now is not so great. And one other thing, David. The stimulus, people believe, are running out. I'm giving you all the bad news here. So for all I know, it's going to be rosy in 3 months. But a lot of people think the stimulus is running out. So you put all these factors together, plus one more factor, hedge fund liquidations. Hedge funds are going out of business, not because it's not an LTCM where they got on the wrong side of a trade. They're just not making as much money as putting your money in a passive fund. Investors are yanking their money out. So guess what they're doing? Hedge funds have to liquidate. So this is what's going on. It's a cluster, you know what. I'm not going to say the word, but that's what you have this thing going on, right? Listen, I have enough presence of mind here, David, not to use that very nasty word, but that's what's going on here, and it's really nasty. And I'll tell you, the triggering thing, I think, of all this is trade policy, and I don't think the president helped by calling himself Tariff Man.
No, that caused
not unless he's going to. If Tariff Man is going to wave his wand and buy some stocks now.
Yeah, of course. Sometimes the darkest hours before the dawn. Who knows if there's a trade deal? If we get a trade deal, things could pop up again. I want to switch to something else you've been covering very carefully. The Justice Department today's back in court, fighting one of the biggest media mergers ever between AT&T and Time Warner. How's that going?
Well, it's actually an appeal, and I think listen, it's very arcane stuff that's going on in the courtroom right now, and I'm not going to go through all that, but I think you have to look at it this way. Judge Leone, a George Bush appointee in the federal courts, basically said the deal should go through, right? He said he rebuffed. And in really harsh terms,
it was unbelievable. I mean,
it was unbelievable, right?
He used some incredibly.
He said the government's argument that this is a monopoly that's going to raise prices was foolhardy. The government said, okay, we don't care. We know Judge Leone didn't like us in our arguments from the beginning. We're going to roll the dice in the D.C. Court of Appeals. Guess why? Because the D.C. Court of Appeals is packed with Obama and Clinton judges, and not no Trump guys lately. Some JW, but it's packed packed with these more liberal judges that are more open to a stance that media monopolies are not good. They got 2 Democrats, an Obama and a Clinton, and 1 GW.
Well, what do you think,
appointee.
Charlie? I'm sorry to push you, but we're running out of time. I want to get your thoughts. Do you think the government has a case against the merger?
I think they have a good case, believe it or not. I've read everything. Listen, there's no doubt that Comcast is going to use NBCU to squeeze higher prices out of consumers. There's no doubt that AT&T is going to use Time Warner to squeeze higher prices out of rival cable distributors. They're going to do it. It's already happening. It's hard to measure it, but there's no doubt. There's no reason they would do the deal unless to raise prices. So on its face, now whether that's anti-competitive,
but do you think Judge Leon was wrong? Because I mean, he clearly slammed the government's case.
Yeah, I mean, Judge Leon basically said the government is because there's not a lot of evidence on these vertical mergers exactly how much they raise. It's very hard to quantify how much it's Comcast, for example, which is a mirror image of AT&T Time Warner, how much they're costing consumers, but they are. And I mean, all you have to do is talk to any rival cable distributor, and they will tell you that prices that it's very. If you want NBCU content, you got to pay up for it more than if you didn't. If Comcast didn't own NBCU, the question is that antitrust? Does that fall foul of the antitrust laws? Is that stifling innovation? You can make a case it is, because guess what? The rise of the internet and cutting the cord essentially happened.
I don't know
more when you don't have these big media monopolies.
I don't know any 25-year-old, including my daughter, who's got a cable service right now. They've all cord.
You're right.
They've
I
all
know.
cut the cord. All right, Charlie, great stuff. Thank you very much for being here. Appreciate it.